What if I told you that the upcoming Bittensor halving isn't just a supply shock, but actually an extinction event for inefficient miners? Everyone is screaming bullish because emissions are getting cut in half, but they are ignoring the brutal math lurking behind the scenes. We are 10 days away from a shift that fundamentally alters the unit economics of the entire network. There is a specific price level, $183, that acts as a death zone for zombie subnets. If we lose that, the miner capitulation could be severe. However, if you look at the weekly chart, we are coiling inside a massive symmetrical triangle that suggests the exact opposite is about to happen. A violent move is loading, and the window to position yourself is closing fast. Today, I'm going to break down the solvency matrix that no one is talking about and show you exactly where I'm buying, where I'm placing my stop loss to protect my capital, and the 4 specific price targets I'm aiming for in this next cycle. Right now, Bittensor is trading around $300, sitting in a strange limbo. If you have been watching the price action over the last 2 to 4 weeks, it feels heavy. We are chopping sideways, and the market sentiment is confused. People do not know if they should be scared of the volatility or greedy for the halving. We are seeing price compressed between key moving averages and a long-term trend line, creating a spring-like effect. But before we get into those technical targets, you need to understand why this specific moment matters. This isn't just another week in crypto. We are approaching a fundamental reset of the protocol's economy. The narrative is shifting from AI hype to AI solvency. Most people are just gambling on a ticker symbol, but there is something happening in the on-chain data, specifically regarding miner profitability and burn mechanisms, that completely changes how you should view this $300 level. Let's look at the catalysts driving this. The biggest catalyst is obviously the halving, scheduled for around December 12th or 13th. Now, the basic understanding is simple. Daily emission drops from 7,200 TAO to 3,600. Less supply, same demand, price goes up. That is the kindergarten version. But here is the institutional-grade research from Trading Fusion. Look at this miner solvency matrix based on H100 GPU economics. This is critical. When the block rewards get cut in half, a miner's revenue drops 50% overnight. But their electricity and hardware costs? Those stay fixed at roughly $1,620 a month. The math shows that for a miner to stay solvent post-halving, they need to cover their fixed daily costs with half the rewards. This creates an insolvency price of $183. If TAO drops below $183, we enter the death zone. In this zone, miners are underwater. They are forced to shut down or liquidate assets. This sounds scary, but it is actually bullish for the long term. It purges the zombie subnets, those generating zero revenue, while the utility subnets that generate actual external revenue will survive comfortably with a 32% safety margin even at lower prices. This aligns perfectly with what Gordon Frayne pointed out recently. On Bittensor, capital follows intelligence automatically. A subnet that ships a stronger model today outranks a slower one by tonight. It is a meritocracy. The halving accelerates this competition. And we are already seeing the effects of this competition through the TAO flow mechanism. Subnets are now burning their own TAO supply to stay competitive. In just the last 30 days, leading subnets like Schutz and Liam have burned over 4,000 TAO each. This is a deflationary pressure that did not exist in the last cycle. So we have a supply shock from the halving, combined with a demand shock from subnets burning tokens to survive. The economics are getting tighter. The entire ecosystem is maturing from a speculative frenzy into a hardened, revenue-focused economy. Now, let's zoom out to the weekly chart and see how this fundamental pressure translates to price action. This is where we formulate our plan. I want you to look at the macro structure first. We are forming a massive symmetrical triangle. We have a descending trend line coming down from that December 2024 top, which has rejected price multiple times, most recently in October. Conversely, we have an ascending trend line coming up from the April lows, acting as a floor. Price is coiling right in the apex of this triangle. Typically, in a bull market, this is a continuation pattern. The energy is building for a breakout to the upside. However, we have to address the immediate resistance. Price is currently fighting at the 236 Fibonacci level, which sits right around $315. We are also trading below the key exponential moving averages. Notice these blue lines, the 10 and 21-week EMAs, and specifically this purple line, the 55 EMA. We are compressed underneath them. For the bulls to take control, we need to reclaim these moving averages and turn them back into support. If we look at the volume profile on the left, The point of control, the price level with the most traded volume, is up at $390. This often acts as a magnet. If we can break this current compression, that 390 level is likely the first stop. Also, look at the Fibonacci RSI at the bottom of the chart. It has lost the neutral zone and is heading toward oversold territory. This tells me there might be a little more downside or chopping sideways before we get that curl up that signals a major impulse move. So, what is my strategy here? I'm keeping it simple and data-driven. I have established a load zone between $260 and $340. As I mentioned in the video on November 23rd, price is working perfectly inside this accumulation box. I'm using this chop to build my position. Now, regarding risk management, this is crucial. My invalidation level is a weekly close below $250. This is marked by the red dashed line on my chart. If we close a weekly candle below $250, it invalidates this triangle structure and signals a deeper correction, potentially back to the $180 region. I would step out of my short-term positions there to protect capital. But if this plays out as I expect, I have 4 clear profit targets. Target 1 is $500. Target 2 is $750, which aligns with the previous highs. Target 3 is $1,100, the 1618 Fibonacci extension. And my final target for this cycle is $1,600 at the 2618 extension. Speaking of executing these strategies, a lot of you ask me how I manage my portfolio allocation and yield farming while waiting for these spot targets to hit. I actually broke down my entire system, including the exact platforms I use like Aave and Uniswap, in my DeFi guide. It is available in the pinned comment below and costs only $4.99. It is a straight-to-the-point playbook if you want to see exactly how I navigate these markets on-chain. So here is the game plan. The risk-to-reward ratio here is heavily skewed in our favor. We are buying near the bottom of a multi-month consolidation pattern, just days before a major supply shock. The best-case scenario is that the halving narrative kicks in, we break above the $315 resistance, reclaim the 55 EMA, and start that march toward $500. The worst-case scenario is the death zone thesis plays out temporarily, flushing us down to test the $250 support. If we hold $250, I remain bullish. If the fundamentals of the halving force efficient miners to hold and inefficient miners to capitulate, the sell pressure drops significantly in the coming months. I'm betting on the math. I'm betting that the scarcity of TAO, combined with the burn from high-performance subnets, will drive price discovery back to the highs. Bottom line, the halving is a solvency test, not just a marketing event. It will separate the strong subnets from the weak ones, and that makes the network stronger. I'm accumulating in this zone with a strict stop loss, because when this volatility squeeze resolves, the move will likely be violent. Let the chart come to you. Don't chase green candles, build positions in red ones. If you found value in this breakdown, make sure to like the video and subscribe. I'm posting daily updates in my free Telegram community. The link is in the pinned comment if you want to catch these moves before the video comes out. I also covered Ethereum recently, so check that breakdown on the screen now if you want to see how the majors are setting up. Never financial advice.